Hello and welcome. It is the 26th day of August 2019. This is the Money Charts channel. Welcome to this evening's video. Let's take a look at gold and silver. As the gold price in the US dollar currency is in at 1528 and just flexing around with these decimal points right now, at least on this particular market exchange index. We've had the Fibonacci level of resistance become that for several days, have amazing support come in at 1494. Well, now I'm looking for support to be within around 1513 to where it is now, or basically 1532. And we look at this little candle here. Some might say it's a bearish one, and I have to say possibly, but no, I don't think it is that. It might go down a little bit more to that, like 1515 or something like that, or even a little deeper for a higher low 1511, but I would be really surprised if this 1508ish or this level of resistance from August the 20th, 21st, it gets breached and taken out if it even manages to even attempt to test that level. When we shorten out the time frame, move it up to the 3 hour term, this is the move that has taken place. So point A low to point B high, and now it's back to that area of previous resistance we want to see hold as a level of support. At least we, if anyone who is a bullish level does, because this is either a failed breakout or coming back and finding that support, and now we want to find that lift-off support on the bullish mark. Again, piercing a bit below it, coming into the 1513. It's no big deal. Finding a higher low from where we lifted off from at the 1494 mark, and if it comes down a little bit there, I would be very surprised again if this area of this level of resistance here that matched several times before doesn't hold as support. And that's, of course, if it even goes there. You see any excitation amongst this 18 average of highs, then that's going to give a very good high bullish precedence moving forward along the way. It's just it hasn't had an exact hit of this, so maybe one might state, hey, if these numbers always work so well and always pierces extra, then we should have a short-term move below it. Maybe we will. I don't know in that case. As it goes on the longer term weekly chart, ever since lifting off above, just even from the 1321 mark, that big level it had to break through. And at first just wanted to see it hold and stay well above this 13 and a half, 1360 handle. And it did more than that. It had a fast move up to this level, which still could work as that level of resistance. Just because it's gotten above it and held for a little bit doesn't mean it has bypassed that as resistance, and we're now off to the next key level at around 1600 and high change, which would represent a 76.4%. For this represents a 38.2% from this high and this low, and so on and so forth. And this monthly chart is looking so much better than the silver one is, although both similar as in, well, sort of, as in attempting to break out from this correctionary mode. As in here, downtrend all the way through. Then we attempt to break out above resistance in here. Up, leave it, no, down back into the 18. Attempt here, attempt number 2 and 3, really. No, back into the 18 and doubt deep below it in the last year at this time. And now back, okay, attempt in here, okay, correctionary phase, okay, working on the attempt, and yeah, successful this time. And of course, the attempt, of course, is to make it to this level. It did. Okay, now what? Do we continue on further to 16 and high, or do we have some sort of retracement? Do we come back to where we come from in here? Do we have a semi-small one, which would be 14 change? Again, we're not out of the woods as far as the level of resistance here. But until we see some changing over on these more shorter terms, the buyers are still in control. And like I was stating again, when we compare this with gold and silver, they both got the similar patterns in it, but gold has a much nicer look. Given that gold is at highs not seen since April of 2013, or I presume levels since 2013 might be good. And silver is now just getting to the end of this 2018. I guess an easier way of seeing where we last were might be on the weekly chart. So we've gotten above this high this particular week, which is today. So it's gotten past the highs of January of last year, or year and a half plus highs. So it technically has made it to levels not seen since September of 2017. And then if we get past that, we'd be talking about going to highs not seen since April of 2017. And if we can get past that high, we'd be at highs not seen since November of 2016. Getting past that high, well, we're now talking about going to levels of September of 2016. And before that, we're looking at August of 2016. And before that, July of that same year. But going before that, now we're talking about 2014 in the summer, and now the spring of 2014 before that. With that, another way of me saying this is just all of these plethora of lower highs. This one in here, this one in here. It's really had, and then when you look, of course, on the monthly chart, it's had a good beatdown overall, and but the similarity, as I'm stating, is the attempt in reverting this trend over. It attempted it here, it didn't succeed, and gold did succeed in reverting its trend to make a bull market. This one you could say, oh, it's in still the attempt to do such. And as I was mentioning, of levels not seen, well, getting above these levels from here, well, then we're talking about these levels of support. That's still a long ways ago, like 26. We're still going to have to rally like 9 basis points or about 50% just to have a test of this level. So let's take a look at things on the daily chart, which for gold, well, that's a nicer chart compared to gold on the daily because gold gave this back. And on the gold to silver ratio, a pretty interesting moment as we've had that's the 8 consecutive decent days down. Where all 8 were okay or good size down days, meaning silver overperforming that of gold. And then I don't know if the dead cat bounce I used to hear it as my rookie days of learning, which I guess would be a definition for that would be after a big fall, you have your little bounce that goes up, but then you're just going to eventually just fall, and it's going to well, most likely break this low. Now that's the question: is it going to break this low of 85.7? For after coming up to this high, price action has a little bit of this neutrality in here, and then a bit more of it in here again after this down move, showing weakness on the 18 lows for 3 periods, and then today's session doing this significant exitation. Okay, so now obviously for previous levels of support, move like this, I'd be looking this for short and intermediate term to be a level of resistance. I'm not looking at the expected target to be previous low. Still has a little bit to go towards there. Usually when I would expect something like this, more times than not, I would expect it to have a significant move lower without getting above this high, meaning just go there continuously, maybe do a bit of sideways moving around here, and maybe find another lower high or resist this previous level of support in here. But it does clear the indication, okay, yeah, I would have to think that the benefit of the doubt is we've came back to where we came from here. Now I think we have to take another leg lower. So I want to take a look at this on the more longer term time frame and see, okay, where does it look like? Just by looking at previous key levels and where it is, I'd be looking more towards like around the 80, high 81 area as the ratio for where the next leg lower would be if, of course, it goes down below that key previous support that is already established. Back to silver. As it keeps moving along very nicely amongst its daily chart on the 3 hour, even as what we see in here, the market gaps open. It just pretty much hangs in there going sideways. Hasn't even came back to this previous major level of resistance. It still may not though. Around 17 and a quarter up to about 17.44. I suppose it technically did. This low is 17.492, and this high is 17.508. So yeah, technically it did. But it didn't go back deep or for that long to where it came from. There's another way of putting it. And you'd expect another leg lower. If again there's going to be one, would be towards here. But we got this nice little upward sideways move and an ascending triangle over the last little 8 few periods or so, which is pretty nice along the way. And yes, again on the monthly, having the excitation amongst this 18 average of highs in here. And it's unfortunate I can't get older data in here, but I did get a comment actually about showing the silver fund, which is actually the futures, which actually does have the data that I would want to see it have. Where I go to silver futures in here, it really doesn't matter which these two, they both work, it looks like the same. But within this, there's all this extra data. I can see the 1993 lows, and I can see the 88 marks, and of course the dollar and a quarter levels I've talked about before. It says buck 30, but I think I got a timestamp of 125. But this high in here, as if it matters too much. It's in the exact same area. It says like 40 or something. It's actually like 50. I think it even. I thought I seen like close, even better than that. Let me go back to the weekly and see. As if it matters, because I mean all of these data points you see don't have much for the tick lines in here. This has a high of 40.5 and then 41. Let's go to the other one here. And then bring this, because this one has the same set of data series as well. I think this one has closer to. That's about the same in here. 41. But there are contracts of this market trading at $50, at least stamped by the LBMA. With that being stated, this would be a good time to maybe take a look at the quarterly chart, which would be 3 months. And so now we can see the possibility of that inverted cup and handle that a lot of people like to talk about. That's why it really doesn't make much of a difference if this is here at 40, if this would be at 50, or if it would have even been at, say, somewhere like, say, 58. It really would have made no difference at all. And all the things we're looking at, the previous key levels, always in the general area of such, it's always about the same as it is anyway. And yeah, the cup head, or yeah, the cup and handle. This is the cup, the handle, and then a completion of it is when you basically have your third test of resistance, the retests in here. And when you have a situation of key high that makes a higher low with a very good price correction, of course, it's higher than this low. And then you have a matching high. So if you have a good price correction, you have to have a good rally to just at least have a matching high, which is exactly what it did. And then you have a good, solid price correction higher low, which is what this would be. And then you have a retest of the previous level. Usually, when it happens, it's going to get there pretty fast. So don't be surprised if when this thing gets past 26, it just zooms to 50 like fast. But we'll wait until we get there before I'll talk more and more about that. But anyway, as it goes. Usually, when it gets there, I've noticed all the time, or more times than not, that the market is very overextended when it gets to this point. But when it does, it's like a huge wild card for overall long term, it's very bullish. But whether you have a quick continuation to a key level of resistance, or whether you have a situation within this pattern where you just consolidate in that general area for a key amount of time, or you have some sort of decent price correction, come back maybe to another higher low because you have this one, and you come back to some sort of other higher low, and then break it. It just seems that regardless if it's a price correction, time correction, or none, we're probably got a good chance on spots like that you would have a good leg higher. And then we look at this further on a fundamental situational level for where we have been, where we are, all that kind of stuff. This is a situation where the price of silver got down to $1.25, which, when you think about it, was lower than its original price, which was, I think, a little under $2, based on its mintage and how much silver was in it for like way, way, way back when. Back when there were actually gold coins pre-war in France and stuff, and all those times, and there were gold coins in Canada. And then you had this little move in here. And this was like, okay, a pretty decent sized move. And it's normal when you have markets that you catch up and maybe you get a little overextended, which I'd have to say it did at this point. But when you compare a situation of the inflationary move, you had a spot where it had a extremely large price correction. None of this stuff coming back down to here. An extreme amount of time in here. And thus, when the price came up again to previous high, it technically was not much at all to talk about, really. It's like, okay, you got a lot of work to do. It's not like we're talking about the Dow Jones going back to its highs from 1980 or 1982, or any of those sort of markets like that. And anything else that was in high levels of upper retracement back in the day of the early 80s, mid 80s, or 1970s. But in conclusion, within this time frame, as far as the situation's concerned, we've had this level of resistance established. Whether you'd have to call this like the early stages of what you would call a bear market, but it's not doing what bear markets are supposed to do, because you have this level of support that it had, key level now. You come to the 18 of highs, okay, that's fine. Bear markets do that. And you had all this testing on the lows, exitation time. Okay, this is where it really was starting to break down from. And why it didn't break down this period or in this period, well, in bear markets, you're supposed to. And now that we've had this move in here, come to this high, to me, I think that she should be very, very concerned on a bear market that it looks like it could be over. The 18 is doing a damn good job at flattening out, and that really does that, like, totally destroys the trend. And it's looking that it wants to, of course, leave this, and then we'd be talking about, okay, establish some sort of level of resistance, maybe come near 22, aka 18 starts to turn, barely starts to go higher, come back to this one of these key areas where it came from, that would meet up with the 18, and then you break it and we're off to the races. That's just normal market behavior. And now back in here, how did this, I'm trying to use the mouse just to move this back like this, but back in here, how did this work on the quarterly on the 18? Well, it had just a time correction in here, at least from this high. And we can see that in this attempt in here, wasn't able to get going, but kept the scenario strong, because the setup here, when you're looking at this, it's a strong setup. Oh, exitation of the 18, what does that mean? Well, in that case, it meant a lot. So just something to keep in mind. I also want to take a look at the chart of gold on here now, because I can take a look at it the same way as well too. I'm just going to remove the drawing tool. I can just put in gold for their futures and just do the same sort of deal. And there we have it here. So the previous level of resistance, gold is held and stayed above it. Much, much different. Then just showing you more how silver to me has been much more manipulated throughout the years and decades now. And within this market here on the 18 average, well, what's it doing right now? And I mean, this is showing a lot of strength in here. I think times are looking to be getting very interesting, to say the least, because this is the first time that it's been above the 18 average of highs since this bull market ended. Previous time getting above, it had some real attempts in here and it failed. It did a reattempt in here, and then of course this last one here. Thank you for tuning in. Have yourself a great day. Bye bye.